and a warm welcome to this quarterly update from SKAGEN Kon Tiki. It has been a bumpy quarter, and portfolio manager Knut Harald Nilsson will guide us through what has happened with SKAGEN Kon Tiki in this quarter. First of all, there has been two major events in this quarter, both Russia and South Korea. What has happened?
Definitely, there's in the third quarter we had a significant underperformance. That is mainly due to two instances. It's Systema in Russia and Hyundai in Korea. In Systema, there are an investigation and also a court case regarding their oil assets, which they acquired back in 2005 and 2009 in an open auction, which was also cleared by the competitive authorities in Russia at that time, regarding corruption. And the chairman is put in under house arrest, and the assets are frozen for Systema's part. There is, as I said, an ongoing court case. When we invested in Systema, we had a quite significant due diligence, so to say, of Yevchenko, the chairman, and he seems to be low leveraged, no political ambitions. There is a significant risk that they will lose these assets. The company obviously claims that they have no wrongdoings, and we will probably get the final answer on this during the course of October. This came from as a lightning from a clear sky, and we had no suspicion about this happening. The share price is down significantly, obviously, and there is a risk that they also have to repay the dividend, which is partly discounted now in the share price. In Hyundai, which has been a very strong performer in the portfolio since we invested in 2009, they announced in September an acquisition of, together with some other Hyundai-related companies, of a land or a building in Seoul for $10.5 billion US dollars. This is obviously overpayment and has led to a significant decline in the share price, actually double the economic impact on Hyundai. Hyundai came with numbers yesterday, which were on the light side, but very positively. They had a more positive comments on the dividend payment going forward. Payout ratio was 6% last year, and they said that they're looking for a material increase in the dividend payments. This investment they made in the land will come over a 7 years period, with the land acquisition first and then the development cost. And in terms of funding, there is not a problem. Hyundai Auto, excluding the finance arm, has $18 billion US dollar in cash, and the development cost of this will be about totally for them $7-8 billion, of which and they generated $3.5 billion US dollar in the first half in free cash flow. So this is obviously not something we're happy about, and I met with the company a couple of weeks ago and strongly resisted this decision, which has been taken though. Hopefully this will lead to a more progressive dividend payment in Korea. It's also the fact that this decision actually has impacted overall over preference shares with increasing discount, because the preference share has been bought in anticipation of a higher payout ratio in Korea. That is the two main things I want to draw on the negative side. On the positive side, we have had continuous strong performance from over Indian holdings, but definitely not in the magnitude as the negative contributors. And it's Bharti and Mahindra, which has both outperformed also the local index.
We'll come back to that later. Should we have a look at the results for the third quarter?
Sure. In the third quarter, we were down in euro terms 2.5%. EM index was up 4.6, which led to a 7 percentage point underperformance. As you probably remember, the first half we were about flat versus the index, and If you look at the 3-year performance, 1 year we're obviously down because of this. 3-year performance and 5 years performance is still quite decent, but this is very unfortunate. I've never seen a situation where we've been hit by 2 tornadoes at the same time.
Okay. And the markets, the emerging markets also reacted to this.
Emerging market in the third quarter, as you probably well aware of, the first quarter was weak in terms of emerging market. We saw a flow into emerging market again from March month, and the performance of emerging market picked up. That has, in the third quarter, we were even Steven, and for the year we're also now even Steven in emerging market versus developed. On the positive side, you have China local shares, which has, as you can see, significantly outperformed the Hong Kong listed Chinese equities. We're going to open that market will open up this year on a quota basis for us to invest, creating a much broader selection of stocks to invest in more domestic oriented companies and not the typical index drivers, which is the banking sector, the telecom and the oil companies. Also, some of these ASEAN markets has done very well, continue to do well in the third quarter, and India, which is significantly up for the year on the election, but it was actually quite a bit up before the election in May as well. On the negative side, not surprisingly, we see Russia on the negative side, which is partly driven actually by the currency, because in local currency the market hasn't been that bad, except for obviously Sistema. Also on the negative side, we see Hungary and also Turkey. Turkey is actually not that bad recently. Asian markets, I would also mention maybe Brazil, which has had a sharp fall recently. We have an election now coming, the second round coming up on Sunday, and I think that will be very, very important. If we have seen in India and Indonesia that more market-oriented leaders has taken position as presidents, and this will be very important because there is obviously a growth problem in Brazil, and you need to rebalance the economy and create some reforms in order to improve efficiency. Overweight in Brazil is very low for the time being. It's about half the index weight.
You've mentioned India a few times. Let's have a look at how that has affected the list of contributors in the portfolio.
Yeah. I mentioned Sistema and Hyundai, which and the Indian holdings can obviously not cope up with this negative performance. Bharti has continued to do fairly okay. It's been a weak stock over the past 3 years. What has happened in India is that there's been less competition because of consolidation in the industry driven by this tariff or you need to buy new licenses. So de facto reduced the number of players in the market. We also see that the data has been a major driver in terms of revenues, with more than 100% growth in data revenues year over year. India has a very low fixed broadband penetration, which means that you're migrating from nothing over to wireless data. So that is clearly beneficiary. Also, we've seen that prices on voice has effectively come up due to reduced promotion. In terms of Mahindra, it's a long-term holding in Kon Tiki, in the terms that it's been in the portfolio since inception, continued to do well on the tractor side, etc. It's a very well-run company. They've never done anything stupid. And you had a weak auto market. This is partly tractor sales and partly personal vehicles. We've seen the tractor being good, but the auto market has been very weak, which we now see some signs of recovering.
And they also come with new models, don't they?
They will, together with, they own 70% of SsangYong in Korea, which is an SUV maker as well, and come out with a brand new platform next year, roll out new models quite rapidly throughout 2015 and 2016, which is very positive in terms of margins and volumes because you don't need to have discounts, and also new models create new volumes.
On the other side of that table, we have talked quite a bit about Systema and Hyundai, but what about Samsung?
Samsung, the case in Samsung and the reason for the weak performance is the handset division, which in 2013 had margins of more than 20%. Those have collapsed significantly, down to 8%. This is definitely not what people had expected, that we had expected. Maybe we should have seen it. The reason is twofold. It's one, it's competition in the low-end side from Chinese manufacturers like Lenovo, which we also own and has been a positive contributor, and Xiaomi, a Chinese manufacturer that does only online sales. Secondly, the high-end side, they've not been successful with the launch of new phones on the high-end side, which has meant a loss of market share also on the high-end, partly to Apple. However, the memory division is doing very, very well with a tight supply-demand balance, and also supported by the fact that the PC market has been stronger than anticipated. People thought, and we might have thought last year, that the PC market, laptop market, was going to wane, and it doesn't seem to be. It's actually been a quite positive development. And 60% of capital invested in Samsung is in the memory division, which are now at a low cyclical but recovering. But it will take time for Samsung in order to fix the handset profitability. Third quarter margins were about 8%. They will probably not recover in the next couple of quarters, so you need the memory business. It's also an issue with capital distribution in that company, and there is an generational shift in Samsung, and the reshuffling of the Chabot system will commence over the next 1.5 years. And I don't think anything significant will happen before that. We know that the chairman is very ill. He's partly in a coma, and so this is transition over to the son.
Mm-hmm. Okay, let's have a look at the important changes in the portfolio in the quarter.
Yes, fortunately we managed to sell out some Systema at prices well above today's level during September. We also reduced a little bit in Exaro, Hyundai, Lenovo, and some smaller positions. In Russia in general, we've taken the weight down to less than 4%, and the index weight is 4.6%. We're not so concerned about that, but we have concentrated on positions like X5, the number one grocery retailer, and also Moscow Stock Exchange, which is actually benefiting from the turmoil in terms of trading volume. On the buy side, we have some new position, Hinadarko, which is an Indian company focused on aluminium recycling. What is one of the key drivers is actually increasing use of aluminium in the auto sector in order to reduce weight to comply with stricter emission rules. So that is actually a very, very interesting driver, and the fact that you are on the recycling side as opposed to virgin aluminium. Isuzu Motor is a truck manufacturer, Japanese one, but with strong Asian franchise and strong production base in Thailand on the pickup side, which is recovering. Thailand has been through an political turmoil, and it also seems to stabilize and doing better on the sales side. Also, we invested for the first time ever in a small position in a Brazilian home developer. We have been a sector in LATAM which has been very, very difficult with bankruptcies, etc. This is actually a pretty good company, a decent balance sheet, and focus on the low-end development where you have schemes for promoting new building. We also took up some, as I mentioned, Moscow exchanges, also increased our holding in casino, where 60% of the values are actually related to assets they own in emerging markets.
Okay. Great. And that leads us to the largest holdings in the portfolio for the third quarter.
Continue to be no changes as such. Hyundai and Systema continue to be biggest positions. There's no changes. What I can say is that I mentioned Hyundai and Samsung here. Bharti, Great Wall has been weak this year. It has recovered a little bit on the volume side. They're rolling out new models, which is very important in terms of pricing and volume growth, and also has extended the capacity in the third quarter. Third quarter numbers came out yesterday, was a little bit on the weak side, but I think that they're now turning the problems they had in the first half. I mentioned Mahindra and the Indian holdings, and AP Møller also continue to do very well with their upgraded guidance twice a year. And although the container market is very, very weak, they have a 10% margin difference compared to the competitors, which means that their return on capital employed in that division is about 9% versus 0 for their competitors. 9% might not be good, but with leverage and so on, it's a decent in a very, very difficult market. What I can say on the top holdings continue to be 40%, as we have said, 40 to between 40 and 50 it should be in order to keep a high concentration on the portfolio. The 35 biggest holdings, slightly less than 70%, that should be up to 70 to 80%. So hopefully we can get it up there. If you take out a little bit of cash here, it's actually up there at 70% at the end of the third quarter.
Well, I think that's it, Knut Harald. Thank you very much for that update on SKAGEN Kon Tiki and the third quarter. I'd like to remind you all that should you need any further information about the funds and how they have performed in the third quarter, there's a brand new market report online, so check it out if you need some more information. Otherwise, you are always welcome to contact us. That's it. Thank you very much for watching.